No, that's not it. That's definitely not it. Okay, I think we're good. You guys can see options on ETFs on your screen? I think we can. Yeah. All right. Excellent. Excellent. All right. That's what happens when you got 9 monitors. All right. Excellent. So, welcome to Trading Options on ETFs. I am very excited to share the setups. We're going to be talking about some options on ETFs on daily time frames with a tried and true approach that I've been using for 3 decades now. We got a lot of material to cover, a lot of charts to take a look at, and a lot of setups to share with you all. So let's get to it. So, what are we going to talk about tonight? Really straight up here, gang. End of day trades that last days to weeks, sometimes months, not that often, but trades that we have exposure to bigger moves in the market. Some of the great moves that we've seen throughout this year. This year has been a year of a lot of great moves, and I am looking forward to more of that into next year. But what we're going to be doing is talking about how trading ETFs is as easy as trading any stock. And in this environment, it's incredibly important to understand the influence of ETFs on the market. How ETFs direct you to higher probability setups, because we're looking at the right stocks that are synced up to a narrative around a particular sector, around a particular ETF. Here's a big one, gang. You only need 3 strategies. My trading has been comprised largely of 3 basic strategies, what I like to call the foundational strategies, the core strategies of trading options, ETFs and stocks. You don't need to know any complicated strategies. You don't need to know any Greeks. I don't use them, gang. Call me a heretic, but it works. And you can avoid the big learning curve because we keep things really simple. And simple works, gang. Simple is not a stepping stone. We don't call ourselves simpler trading for nothing, right? It works. So, but there's more we're going to discuss: how to stop or prevent overpaying and under collecting. Keep that in mind. In fact, if you want to write this down, ask yourself, when I'm trading options, do I understand what it means to overpay? Am I overpaying? Am I under collecting? That's something you need to always keep in the back of your mind, especially with options. How you don't need years of experience, you really don't. How large and small accounts can use the same rules. It's a scalable approach. It's a scalable mindset, gang. And, a frequent question that I get is, how much do you need to start trading options on ETFs and stocks? I'll say you can start with as little as 2,500. The option strategies that we're using that I'll show you today, and I'm going to show you here in just a moment, on average, they range from as little as $1,100 to an average $2,400 to about $3,000 capital required per position. And you're going to see what that can do. It may not seem like a lot, but you'll see what that can do. And of course, it doesn't matter if you have 2,500, 25,000, 250,000, or 2.5 million. The rules are the same. All right. So I mentioned that the type of trades that we're going to talk about here today, and by the way, this is my year P&L in this particular account. Okay, so it takes you month by month by month. We're not going to talk about a few trades that worked really well in August. We're going to talk about trades throughout the year. All right, even, when we have difficult ones too, gang, and when we have amazing ones as well. Okay, or even when we have a good string of months. So the idea here again is, how much does each trade potentially cost? Again, on average, about $2,400. Okay, so again, scalable. By the way, everything is recorded. I'm sure you guys heard Daryl's amazing intro. I know it's time, right? Daryl just gets you ready for some learning. Everything's recorded again. We usually get the recording out to you all very quickly. If you are having any technical difficulties, we have folks that will usually try to help you out as much as they can, and then the recording will be sent to you. Okay. All right. Moving on. Okay. So this is a big thing, gang. This is the first time ever that I'm sharing the way that I trade options. First time ever. What we're doing is talking about ETFs. Yes, ETFs on options, but remember what's inside of an ETF. What I'm sharing with you is how I look at ETFs and stocks through the options chain, right? I've never shared in depth my options before. Some of you might have seen my futures or Forex techniques, but I've never shared my options techniques before. So, this is what I've been doing for 3 decades, again, with just 3 option strategies, all right? For those of you that may not know who I am, quick intro. I'm Raghee Horner. I wrote some books. I make some trades. I teach, which is a wonderful part of my life. I can be found in the futures and options room at Simpler Trading. I've been trading for over 32 years, multiple assets, futures, Forex, stocks, options, little crypto. I started trading at 15. And since then, I know I was meant to trade. I was very lucky to find my vocation very early in life. And I'm even more fortunate to spend time talking to like-minded folks who want to slay the markets. So just some cool things that I've done. It's experience, gang. I want to share with you the good, the bad, right? The ugly, the lessons, hopefully shorten your learning curve, because I have been doing this a long time. How can I bottle 3 decades into education? That's what I'm always looking to do. How can I take everything that I've done for 32 years and make it as accessible and practical as possible? So let's get to it, right? Let's look at some recent trades. All right, so this breaks down some of the recent trades. Now, what I want you to notice, we're talking about options on ETFs, 3 simple strategies, end of day time frames. By the way, end of day, do you think you need to spend a lot of time doing this? You really don't. This isn't where you're glued to the computer, all right? So notice I've got some stocks, I've got some ETFs, got some country ETFs. That's actually the ETF for China, FedEx, which is part of an ETF, right? Individual stocks. This cracks open the market. So see, these are some of the recent trades that I put on throughout this year, all right? Throughout this year. So I do want to mention that. All right, so let's take a look at a couple examples, shall we? So this is the QQQ, daily time frame. Daily time frame means each candle is 1 session, 1 day. So you'll notice what I've done through the examples that we've done, we're looking at is I'm looking at the entire year, right? These are the trades that I've done from January to the current. And you want to look at the dates. I've marked these dates here so you can see some of the entry zones that I've focused in on, as well as when I've been dormant. Gang, we've got to be discerning about our trades. So here we have an example in the QQQ where we've gotten in with some long calls, September, August, July, you'll see there. And it's given us really a very good return. Again, remember, each one of these positions is roughly $2,400. So you can definitely see your ROI over here. I don't want you guys risking a lot, because risk is like a pendulum. You think you're going to make a lot of reward, but there is a certain amount of risk that is associated with very high reward. What we want to do is moderate the risk and have a consistent strategy. Okay, let's take a look at another example here. Actually, no, I did have a big topic here that I did want to cover. This is a question that I get a lot of. This is the PG-13 part of our presentation, gang. We're going to talk about naked and uncovered. All right, what are we talking about? Naked and uncovered options. Let's talk about risk, naked and uncovered. We get this a lot in terms of the concern of having options that have an unknown, unlimited risk. So again, I focus mainly on buying and being long options. Not that I don't sell credit. I do sell credit, but it's not uncovered. Okay, it's not uncovered. We cap the risk. We limit the risk with option spreads. We can also bring in cost with options spreads, okay? If you sell a put option without owning the underlying stock, you have what's known as a naked put position. I do not ever recommend naked selling, right? Selling naked options. We're focused mostly on long calls, long puts, credit spreads where we have the safety net built in, debit spreads where we're offsetting the cost of the trade. Okay, so no naked, uncovered options. We're not selling premium without either owning the underlying stock or without having an option to, again, cap the risk. All right. Okay, now that we moved on from our PG-13 part of our presentation, back to some chart examples. All right, remember, options on ETFs mean what? We can actually look at a lot of the stocks within ETFs. Microsoft is a piece of the XLK. In Microsoft, and what I'm showing you right here are some basic long call positions, right? Some basic long call positions. See right there that we took. These are the expiration dates. That's the strike. That's what I paid, right? You can see that what we're looking to do is find strength in a market and then time the entry with an ideal time to, remember the words I said to write down, not to overpay. What we're doing is we're slipping into the market at times where most market participants are looking the other way. Calls are less expensive. That means our cost is lower and our risk is less. All right. These options cost me $865, $1,055. And then you can see what we did on the P&L side. And this was a basic long call position. And I know a lot of folks say, well, you can't make money buying calls and buying puts. That's absolutely incorrect. My entire career has been designed to prove that wrong. All right. Designed to prove that wrong. So let's talk about some of the indicators on the charts. What are those indicators? When we're looking at this here, we have some moving averages, some what I call propulsion dots. So what are the indicators on this chart? Now, I don't want to sidetrack the conversation. This isn't about the indicators. All right. I'll give you a download at the end of the webinar that will give you an overview and some links where you can go get the indicators and start to play around with them. You do need to understand how they work. Like any indicator, like any tool, you need to know how they work. But these are the tools that I have used for many, many years. So what are the indicators? What do they mean? Where do I get them? You'll get a download later on in the presentation. What are the indicators? Well, the TOPS indicators. The wave, the grab. Those are the color-coded candles and the moving averages on my chart. The JT trend trade flag. This gives me an at-a-glance read at the structure of the market. It shows me whether the symbols are bullish, bearish, or neutral. Sometimes you'll hear me talk about double green and double red. Those are great market types, right? This gives you an at-a-glance read of them. Propulsion dots. Propulsion dots, gang, they're a dynamic indicator that tells us about the fuel left in the tank. Is the market able to continue accelerating or not? But another thing that it does, it is a smart exponential moving average. It's a moving average replacement as well as a moving average cross. And like any moving average tool, you've got to use it in the right environment. All right. It's on a buy or sell signal. It's more about whether or not the market's capable of continuing and from what levels we could see support and resistance. So if you had a moving average that knew when to shut itself on and off, knew when it was in the right environment to give you the best kind of information, and then disappear when it's not, you've got propulsion dots. All right, some of the other tools that you'll see on my screen are the volume weighted average price, the VWAP max tools. It's 4 indicators. It's an anchored volume weighted average price, shows me where the conviction, the commitment is on the chart. I've got the V-score indicator, which is an indicator that I created that measures the standard deviation of volume weighted average price. You might say, oh my gosh, Rog, what the heck? All that means is how far away from the mean has price wandered? Think of it as a bungee cord, right? Has price wandered far enough where it's going to snap back? We've got the V-score bands, which coordinates with the V-score and shows me where the price is on the chart that coordinates with the reading on the V-score. So the V-score bands sync up with the V-score indicator, showing me where the price is. All right. And then the V-profile, this shows you where 70% of the volume has occurred on the chart, with the point of control being where the most volume took place within that period of time. So these are all volume-based tools, showing you where the conviction and the commitment is. And again, it's a way to track size, big volume, big size. All right, so these tools may sound familiar. I hope they do. They've been the foundation for what I've done for many years. What makes this different, what makes what we're doing now different, is we've never taken these tools and applied them to options on ETFs and stocks like we're going to do right now, right? So it's the application of these tools, studying price and trend and volume. But now we're looking at ETFs and stocks and trading options on the daily or end of day chart. Okay, so let's get back to the options on the ETFs. And again, familiar tools, you will always see these tools on my charts. They work. Why would I let them go, right? Now we're going to talk about how they work on markets that you may not have known that I trade very often. All right, so looking at the strategies in play on the charts, keep a few ideas in mind. Again, these are all daily time frames. We're focused on directional entries with an edge. I don't want to overpay or undercollect when entering these long calls, long puts, or spreads. These are trades that last days to weeks. Now, another common question that we get, right? So if they're lasting days to weeks, a common question that I get is, Rog, how many days to expiration? DTE, how many days to expiration do you focus on? Gang, I'm usually, it's going to vary a little bit with which one of the three strategies that I'm using. It's going to vary some, but typically it's 30 to 60 days to expiration. Even when I'm writing premium, say in a put credit spread, right? But it's usually going to be 30 to 60 days. Just it's going to depend on the environment and some other factors, but that's usually the sweet spot. So let's get to it. TSM, Taiwan Semiconductor. It's the heaviest weighted stock in an ETF known as the SMH, or the Semiconductor ETF. So this is a long call example. This is a recent long call example. I believe this one might have been a trade of the week. It's one of the things that we do here at Simpler. And we were looking for opportunities to get long. Color of the candles are green. The overall market had been heading higher. Now, one of the things to keep in mind back in here is what we're looking for is double green. Now, I realize these are yellow, but that's also reflecting where we are right now. So one of the things to keep in mind is that when we are seeing green grab candles, grab, G-R-A-B, candles, we want to look at the long side. If I want to look to the long side, then I'll look at primarily long calls. Now, take a look at the price of the calls. One of the things that I've always sought to do is not focus on very expensive options. It's a $6 option, gang. Okay, the $6 option that yielded a $1,600 profit. Now, we bought it for $605. You can see there sold it for $878. Now, when we look at an option like this, a long call, it's in anticipation of the market continuing to move higher. Now, we could look for strategies like a put credit spread that would also allow me to take advantage of markets moving higher, or a call vertical. Those are typically the three things that I'll look at. Why the long call? The inexpensive nature of it, and my conviction that this is a high quality, strong uptrend. Now, there's nuance as to which one of the three strategies we use, but if you get the direction right, life becomes a whole lot easier. And how do we get the direction right? Well, we look at an analogy that I call the boats and tide. That means that Taiwan Semiconductor is the number one weighted stock within the SMH ETF. If the SMH ETF has roughly the same structure, it's bullish, I have a high expectation of continued movement higher, I'm not focused on getting hoodwinked into a short at the first sign of weakness. And I'm not impatient and buying new highs. I'm waiting for, again, those very specific opportunities where we have a chance to pick up these options inexpensively. How inexpensively? In this case, now notice some of the days to expiration, again, in that window of 30 to 60 days, $985 or a $9.85 option. This case is a $10.70 option, $3,400 and $2,300 by waiting for inexpensive opportunities, waiting for an edge in the way in which I'm getting my price. Now, what does that mean, getting my price? Not overpaying. Gang, if you overpay for options chronically, if you chase options positions, you're going to have inherently more risk. One easy way to control risk is wait for a better price to enter. Now, I don't want you guys thinking this is just all about uptrends and long calls. In the P&L that I showed you, these were also opportunities to get short. So we had opportunities to get long puts and focus on trades that were moving lower. And by the way, we'll come back to that month-to-month P&L, but my best month in 2020 was March. I didn't need the uptrend through June, July, August, and some of September. We just need the movement and the ability to scoop up those options at a low cost. And that's what you're going to see again and again with these examples where we're able to pick these things up at a low cost. Here's the IYT. All right, this is the transports. I love this one. This has been one of the outperformers since summer, the transports ETF, IYT. Again, focusing on long calls. Now, one thing you'll notice here on the long calls, and we'll talk a little bit about this right now, is I leg into my options. When I'm bullish and I want to buy, and get long, I'll start off, unless I'm doing a put credit spread and I'm thinking that I might want to sell, collect premium. For the most part, if I'm feeling a high degree of conviction, a high degree of directional bias, I will focus on first the long call and leg into, if I need to offset cost, a call vertical. Now, offsetting cost isn't something you have to do, right? It's not something you have to do to lower your risk. I can control risk with a long call. I control risk by not overpaying and chasing in a bullish market environment. And I also understand where the validity of the trend is. For every one of these, that was the case. These were long calls. Now, again, I could scale in. If I wanted to build a position that was large enough where I wanted to offset my risk, then I would turn the long call at a later date into a call debit. This is a little unorthodox because most people enter these at the same time. So some of these little tactics, while they may seem unusual, unconventional, that's how you get an unconventional return, gang. You think outside of the box. You do things that other traders are not doing. You trade in a way that the herd is not trading, right? So one thing that a lot of folks ask is, Rob, what kind of options do you buy? We got an idea of how many days to expiration, but a common question that I get is, Rob, what kind of delta, right? Remember I said I don't use Greeks? I don't use Greeks, okay? I don't really, not that there's anything wrong with knowing your delta, but I'll tell you this right now, keep this in mind. You can trade options that are too high a delta. That is a fact. So my obsession is not about with the delta, although on average, for those of you that are curious, it's usually about a 50. But what I'm focused on is giving myself enough time, and I focus on at the money or slightly in the money. Like I said, we keep things very, very basic. What we do is we capitalize on movement, gang. We're doing the things most traders aren't doing. We're looking for specific triggers and for specific price behavior. And then once I know I'm getting a certain kind of volatility or a certain kind of pattern, then the choice to either go with some sort of a debit spread, go with a credit spread, or go straight up directional with a long call or a long put becomes very simple. Those are the only three decisions I'm ever having to make. And that's the only things that I did this year. That's all I ever do, period. Okay? So that's the IYT. Usually at the money or slightly in the money in terms of the strike. Let's not get complicated, right? We want to keep this as simple as possible. Simple is effective. Simpler is even better. So here's FedEx. FedEx is a stock that's heavily weighted within the IYT. In fact, it's been a relative outperformer within the IYT. How would I know that? Because by using the ETFs, by trading the options on the ETFs, I'm getting the leverage. And by using the ETFs, what I have is a pre-curated watch list of names. What do I mean by pre-curated? I mean that I know which stocks are going to move together, tides and boat. I'm not looking for a one-off somewhere. I'm not going symbol hunting. I know it's going to move together. And then all I need to do is find the relative outperformer. So another thing you can ask yourself along the lines of, if I'm not trading options in a way that's as effective as I know I could be trading, I know I could be a better trader. What's the corner that I have to turn? Gang, I'll tell you what the corners are you have to turn. You need to turn the corner on overpaying. You need to turn the corner on under collecting, and you need to turn the corner on focusing on relative outperformers, not the stock du jour of the week or month, but the ones that are in these ETF, I'll call it pre-curated pockets, these stocks that are moving together, that are liquid, and you find the ones that are behaving in the best way. FedEx was a great example of that. And you can see here, by focusing on that relative outperformance, it yielded a fantastic gain. So keep this in mind. This is a bit of a twofer. While I'm playing IYT, I'm playing FedEx. So you can see how we kind of double up in many ways. If something's working, we go all in, right? That's something you'll hear a lot of with successful traders. If something's working, press it. This is how we press it without overloading a single symbol, but without putting all of our chips in one symbol. We do it relatedly. Okay, here's McDonald's. All right, let's go into another example here. All right, so we're taking a look at McDonald's here. And so McDonald's, you can see we're focusing on a long call. Now, every one of these lines represents a different strategy. These were bearish strategies here. Bullish, 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 and bullish again. Okay, so again, we're playing both sides of the market depending upon the underlying market environment. That's a key, gang. Right? I'm not deploying the same kind of strategy all 12 months of the year. I'm looking at the underlying market behavior, and this is where long calls made a lot of sense. All right. So in this case, you'll notice these are September expirations. I'm building these positions in August, right? I'm giving myself time. Paid $8.65, liquidated for $16.58. Again, inexpensive options, yielding a very nice return. So your risk in a trade, gang, whether you know it or not, think about it for a moment. Your risk in a trade is very much related to what you spend on the option. You overpay for the options, you spend a lot of money on the options, your risk is going to be a percentage of that. So that previous trade, remember I said we can kind of double our fun. That previous trade in McDonald's is related to an ETF called the XLY, Consumer Discretionary ETF. So as I'm playing McDonald's, I'm playing, that's the boat, I'm playing the tide as well. Take a look at the trades that we took here in XLY, different long calls within the context of the move higher. Again, please note how inexpensive these are. These do not cost a lot of money to get into. And if you wanted to offset the cost, you could, right? Offsetting the cost for me would be a call vertical. We'll limit our risk and we'll limit our reward, but it reduces the cost. So regardless of where you are in terms of your account size, with these three basic strategies, you can find a way to make the trade affordable and right for you. Okay, so let's go take a look at the chart of the XLY. So you'll notice I've got an August 21 and a June 19 expiration, two different trades here of that list. If I'm playing August 21, we're usually going to build that at the end of June, or even as I build something for June, I'm usually building that in the beginning of May. So again, think about that 30 to 60 days. Think about that as a really good guideline to not ever have to deal with the issue of time decay in a major way. A lot of the problems that I see is traders look to try to buy in the money options, but then they forego time. Gang, time is something you want to put on your side. Okay, I'd rather be at or slightly in the money with time than deep in the money without it. Notice I'm always putting time on my side. And in this case, we picked up some options for $5.90, $7. Again, very inexpensive. You can see what we liquidated them for. This one was especially gorgeous in here. And this was the XLY. Now, the XLY was in addition to McDonald's, or I should say, McDonald's was in addition to the XLY. Nike is another stock within the XLY. So like I said, once you start to crack open and understand how to trade the ETF, very organically and embarrassingly easily, the individual stocks that are tracking with or even outperforming the ETF start to glare out. They start to just literally just shine at you, because now you know that they're moving, generally speaking, all together, and some of the individual stocks will outperform the overall ETF. Okay. All right. So this is Nike, also in the XLY. XLY has been a fantastic ETF. We've been trading that one a lot. I'm looking to get right back in and put some more trades on in the XLY and some of these outperforming stocks within it. Now, the outperforming stocks within it will continue to change, right? You've got a list usually of about 6 to maybe 15 names. I'll usually focus on the top 11, but you've got a good list that you can look at to see where the best opportunities are arising within the ETF while you're trading the ETF. So here in Nike, June 19 expiration, long call, 610 to get in, 918 got out. That's $3.08 or $308, and at a $6.18 option, right? I'm not buying just one of them. You could, there's nothing wrong with that. But I'm buying usually, like I said, every one of these examples that I'm showing you on average for this account, what we focused on is trying to keep an average of about $2,400 cost. Some of these examples in this account were around $1,100. None were any more than $3,000. So again, how much capital do I need to put on this trade? In my, what do I need free within my account to put this trade on? On average, $2,400. Okay. Each one of these trades are right around that area. This brings me to probably the most important chart that I'm going to share with you all. And we're going to tackle some Q&A together here in just a bit. All right. And I'll be happy to cover that. How are we doing so far, gang? How's everyone doing? All right. Getting the idea that the ETFs give you an idea of what stocks are moving. So you're not hunting through 3,000, 9,000 stocks, right? You're looking at a very connected, more predictable, higher probability group of stocks and a higher probability expectation of movement. What else are we talking about? Daily time frames. So I'm not in and out, in and out, in and out. Not at all, right? We're picking our spots. We're picking these things up when they're inexpensive. We're focusing on the lower cost of options, ETF options. ETF options are, generally speaking, very affordable. Notice none of these options that I've shown you, I think, were generally over much more than 10 or 13 bucks on the upper end, right? So you can trade low cost options, end of day, 3 strategies. And you'll notice how much I rely on legging in and starting off with a long call. I do put credit spreads, but there's a very particular way that I like to do them. I don't do them often. I love to collect a credit, don't get me wrong, but you got to be really cautious about those. A lot of times they're overused. But if you can play directional, call debits to cap your risk and reduce your cost, or long calls bought at the right time. 3 simple strategies. And by the way, gang, 3 simple strategies that are the backbone, the foundation of every option strategy there is, right? Those are the building blocks. This is a really important chart. It might look confusing at first, okay? But hang with me one sec. October was a tricky month for a lot of folks. It wasn't an easy one for me either, but it was a tricky month for a lot of folks because of the way the market started to behave in front of the election. Now, the idea here is when you're wrong, and of course, these are anything below the white line that I have here. Let me put this, you guys can see that white line hopefully really clearly. But anything below that white line that I have here is a trade that was below zero. So it was, as we would call it, a loser. Okay. They're not all winners, not even close. Yeah. Well, there's a lot of winners, but you get my point. Notice that when we're wrong, we're not taking a knee. It's a quick blow and we move on, right? Take the loss and carry on. None of these were huge losses. I'm not ending up with, dots way down in here, right? But what am I ending up with from time to time? Well, let's use a baseball analogy. I'm always getting on base as often as I can, right? I would call these in here singles and doubles, right? Consistent, putting money in my account, putting money in my account. Every now and then we connect really nicely with the ball, a triple, a home run, a grand slam. My account is not built on grand slams. Your account ideally is not going to be built on grand slams. Small losses, consistent, and lots of moderate winners. And every now and then you get the fun of saying, wow, I just took a position for a $38,000 winner, which is what this was up in here. Okay. How big are your losses? We can talk about profits all day long, gang, but I want you to have the most beautiful uptrend you've ever seen in one place, in your P&L. That's the only uptrend that counts, gang. That's the best uptrend in the world. Smooth upward P&Ls. You can't do that if you're not limiting your risk. You can't do that if you're taking big hits. All right. How consistent are your winners? How big are your losers? This is a dot plot, if you will, of the account. And this is, like I said, probably the most impressive thing that I can show you in the way that I teach you to use 3 simple strategies in the market. All right. So again, it's an approach for all markets using options on ETFs. And then adding to that, the individual stocks that have a higher probability, a higher predictability of moving, the boats with the tide. The tide is the ETF. The individual stocks are the boats. Okay. So notice again, when you can press a winner, you press a winner. If things are working really well, you press a winner. Don't be afraid of moves lower in this market, gang. I don't think that's what's going to happen, but don't be afraid of downtrends. And when you do have markets that are trending nicely and smoothly, ride them out. And when you have markets that are starting to act a little wonky, as we saw going into September and October, you start to take your foot off the gas. You don't have to hit the brakes, but you take your foot off the gas. Really important. That's what leads to a predictable, upward, smooth P&L that doesn't have big hits that risk ruin of your account. Okay. All right. So, and I see here great stock picking, but here's a cool thing. It's not difficult. I'd love to tell you it's difficult and, my crystal ball has been accurate for 32 years, but what I'll tell you is ETFs are relatively new, and they've only been growing in importance steadily since 2008. So you've got an edge on people who don't understand the importance, the influence, the psychology that ETFs carry in this market. It's only been in place for about 12 years, gang. Okay. So this is relatively new in terms of traders respecting what the ETFs are saying about individual stocks. And oh boy, are they ever. Okay. So really, what have we accomplished here tonight? We've talked about options on ETFs. We've talked about limiting the risk, making sure individual trades, like I showed you here, don't blow your account up, or what we call the risk of ruin. We've talked about a scalable approach. No, not once do we have to get into Greeks. At the money, 30 to 60 days out, and focusing on whether or not it makes sense to leg into a call vertical or some sort of debit spread. When we can think about credit spreads, and don't be afraid of being long calls or long puts, right? We're told that doesn't work. I'm showing you right here. It absolutely does if you focus on the directional bias and you don't overpay. Really important. All right. So those are really what I wanted to drive home here. And again, the options on the ETFs allow you a couple key things. Again, you're not searching the market looking for opportunities. They're right there in front of you. I use a couple specific layouts to do it, and it just pops right out. Okay. Well, let's get to it. Tomorrow, gang, this starts on Saturday, but tomorrow we've got the beginning of the class. So I'm going to show you guys how to get these indicators. So just give me a minute and I'll give you the link for the indicators in just a second, so you can at least kick the tires on them. But tomorrow we're going to have the tech session for the indicators tomorrow after the market close. So I'll be with you along with, I believe, Eric, and we're going to walk you through the chart layouts, one of my favorite layouts called the multi-chart that's going to blow your mind in terms of simplicity of having these these ETF curated stocks pop out at you when an ETF is something that you want to focus on, long or short. We'll be doing that tomorrow. And then Saturday, we have our class. All right. But the class starts tomorrow. So regardless of who you trade through, right? If you trade through Tasty, if you trade through Toss, if you trade through TradeStation, it doesn't matter. It doesn't matter because we're using very simple, like I said, we keep it simple. I'm using mostly limit orders to get in. There's sometimes, these conditional orders make it very simple to say, well, when this condition is met, I want to get in. And I'll show you how I use alerts and things like that. So we have our basic class starting tomorrow, gang. We're going to get you set up with the indicators, and then we have our class, a 4-hour class on Saturday. All right. We have our pro, which includes live trading, tech class, and the class, of course. Then we have our elite, which is 4 days of live trading. Now, let me tell you something about the live trading that we have coming up, which I'm really stoked about. And by the way, yes, this is not a day trading class. I wanted to remind everybody, right? This is about end of day time frames and options. I get that question quite a bit. This is not day trading. This is not something you're glued to the computer doing at all in any way. All right. So what are the things we're going to focus on? The 3 simple strategies that I use. I do not use anything but these 3 strategies. An entire account, 3 strategies. How to watch and trade the sectors and the stocks within them as you watch me do. Say the XLY. The XLY yielded about 3 or 4 different stocks that I traded along with the XLY. When you have an advantage, gang, the best, they know how to press it. I'm going to teach you how to press your advantage. How to quickly identify relative outperformers. That's how you do it. And a whole bunch more: order execution, the strikes, the width of my spreads, days to expiration, all the details for those 3 strategies. Now, when we get into the pro package, let me mention something here. What we're doing, because we're trading end of day charts, is that we're getting together once a week. So in between, you can review the class, you can do the things that I've taught you to do to scan, but you'll also get my trading ideas. So we're really going to be together for the pro package for 2 weeks, right? So we're going to come back a week later. So 1 live trading session, then another one a week later. So in that span of time, we can see what's going on with this market. I think November is going to be a very interesting month. I'm very optimistic about a number of setups that are right there on the edge of triggering. Some of them already have, and there's plenty more that are just waiting for a few key things to happen, a little bit of clarity. And then I think November, December is going to be very interesting for us. So what that means is we're going to have 2 weeks with a pro package to create and curate your watch list. Get your question answered, of course, in the live market condition. Watch me put in the orders. I got a lot of questions about how do you put these orders in? Limit orders mostly, gang, but how wide, how many days to expiration, which part of the options channel are you focusing on, Rob? Learn step by step how to do all of that. Again, in a live market environment, which I love. Of course, we send out alerts. So while we're doing all this trading, if you can't be there live, you'll get the alerts on your phone, which is really cool. We can't guarantee it, but it happens a lot. It's more probable than not. But the whole goal is for the live trading portion to not only train you to, with taking what you learned from the class and bringing it to the live market, but hoping to also recoup your investment in the class. That's always the goal. All right. So the elite package now, if the pro is 2 weeks, the elite's the whole month. We're getting together for 4 live trading days. So in the elite, you get everything in from the pro package. And then what I'm going to be doing, because we've got more time, and as we get later into November with this elite package, we're going to talk about some of the fundamental and macro impact on sectors. What's happening with this market as we're at this point conceivably going to be looking at a new administration potentially, end of the year impact, Fed decisions. We've got a lot of interesting things that are beginning to impact macro, and that's going to impact the sectors that we focus on. We're going to be able to fine tune the watch list. So now we've got an entire month to continue to fine tune a watch list that I think is going to take us clear into the beginning of next year. So I'm super stoked about being able to have a real immersion. I've never been able to do this with a class before. I'm so glad you're going to come along with me to have this full month immersion, because now we've got all of November to discuss what's happening in these markets. And again, as always, instant alerts on the watch list and the setups that I'm going to take. Okay. And you can see the dates on both these slides: November 10, November 17, November 24, and then we wrap it up on December 1st. So we're going to be together for a month. Very excited. All right. So again, basic class and the technical setup session, which is tomorrow. This class starts tomorrow. The pro, which is the class, and 2 days of live trading, which is 2 weeks with me. And then the elite, which is the class, the tech setup, and 4 days of live trading, which is in total 4 weeks, because we'll have all that time to watch how this market begins to give us more clues into where the next big moves are going to happen. So very excited. And you can check all this out over at simplertrading.com/ETF. The following indicators are included in all the packages, gang: the grab, the wave, the JT trend flag, and the propulsion dots. I'll teach you how to set these up right? How to increase the probability of when to use them, and that the signals that you're seeing from them are the ones that you want to react to. If you want the VWAP indicator bundle, call support 512-266-8659, and they'll walk you through if you want to put the VWAP indicator, V profile, V score, V bit. You don't need them for the class, gang. It is very helpful, that's for sure. And by the way, you'll have the whole, you'll have time to decide if you want to add it to your class. Okay, so don't let this be something that keeps you from doing it. You can start with the free tools, and if you want to watch how I use these over the course of the class, in the next 2 weeks, the next 4 weeks, cool, and then you can make a decision. Okay, all right. Everything's going to be recorded. All of this is going to be in your personal library. You can review it as much as you want. A lot of you know that I put in a lot of extra resources. So you have your live trading recording, the class, the technical sessions, and then I upload a chart book as well of the different setups. So you have a visual reference to when do we put on a put credit spread? When do we go with a debit spread? When did Rob go long call or long puts? You'll have all those to study. PayPal, thanks PayPal, 0% interest, 6 months, just makes it that much easier to join me. And here is your free tool access. All right. So it's at Raggi's ultimatetoolkit.com. Raggi's, so plural or possessive, Raggi's ultimatetoolkit.com. No www. Okay. So just no www, Raggi's ultimatetoolkit.com. And what that's going to do is give you a doc that explains the free tools, the wave, the grab, propulsion dots, and a link to go download the tools for TradingView, Thinkorswim, or TradeStation. Okay, so these are the free tools. So gang, the class begins on the 7th, but really the tech class begins tomorrow. All right, so keep that in mind. Super excited for this class. All right, let's tackle a few questions here. All right. So it is a 4-hour class, gang. So in 4 hours, yes, I'm going to be able to show you how to trade 3 strategies, any market. Now, one of the things that we talked about is it's an approach for all market types, gang, not just the rally we saw through summer. This worked really well in a downtrend. So if you're concerned about the markets rolling over, this is definitely something you're going to want to learn. I'm looking for, hey, if the markets roll over, I'm game. I don't think they are. I don't think they are. But if they do, gravity applies, gang. Don't be afraid of any kind of market behavior. You can trade all of it. You can trade it all. All right. So as my account grows, do I size up? So Jim, what I like to do is put big size trades in a separate account. What I like to do is have separate accounts. So for example, my husband, some of you might know, was trading with me for quite some time, take a little hiatus. But one of the things that we did is we limited what his individual position sizes could be. And I do that even for myself, right? My personal trading is about 3 to 6x what I was showing you here. But remember, when you're risking, say, $15,000 per position, it's a different risk reward. It's a different pendulum swing between risk and reward, right? So I actually recommend I don't scale in the same account, right? I actually don't do that at all. What I'll do is I'll have a certain account for certain types of trading, certain risk. And that's just the way that I've always done it. And plus, when I'm teaching my husband or I'm teaching, you guys, it just makes it that much easier for me to show you guys a defined risk. Because if I'm trading a $20,000 position, a $120,000 position, and $3,000 position in the same account, I can't show you guys the consistency of the approach. And that's important to me as someone who's chosen to spend a large part of their life teaching traders to slay the markets. What time of day do I enter the trades? Great question, Pierre. We use a couple different tactics like alerts and conditional orders to capitalize on the fact that trades can occur at any time of day. But I will say most of my homework for this type of trading happens in about 60 to 90 minutes a day in the afternoon. And I think in the beginning, it might take you about 2 hours, but about 60 to 90 minutes once a day to keep up with it. I use conditional orders, which I'll teach you how to do in the class. I use alerts, which I'll teach you how to do in the class. So I don't have to be glued to my monitors. So the time of day is going to really be up to the market. But when I do my homework is typically in the afternoon. But here's the thing, Pierre, you can do your homework anytime you'd like. Yeah, anytime you'd like. Next question here is, can someone please explain the start date for a trade? The start date for the trade. I mean, we'll get into the dates in the class, Paul C. So basically, start dates for trades, if I'm doing basically 30 to 60 days from expiration, my entry, when I'm choosing the strike and the expiration, strike's typically going to be around at the money, right? Obviously, if we're going into spreads, the width is going to be relevant to the volatility and the underlying market trend and the economic calendar, for that matter, too. But as far as the first leg of a debit or getting into a long call, I'm usually going to be about 30 to 60 days from expiration. So that gives you a pretty good idea of where I am from entry date to that expiration date. But I'm usually out of the market before expiration. I'm usually, I seek to be out about 2 weeks before expiration, if I can. All right. So then the next question is, and that's a really good question, so I appreciate that as far as time goes. So when I buy a call in McDonald's, because it has a good setup, do I also buy the XLY? Mike, really good question. They don't always happen on the same date, but they should typically be doing the same thing. Sometimes, especially in an uptrend, here's a really good tip. In an uptrend, I will usually go general. In an uptrend, you're going to be thinking about index ETFs and sector ETFs because high tides and low outgoing tides raise and lower all boats. But in terms of individual stocks, sometimes an individual stock will be a laggard, sometimes it will be a leader. The indicators, JT Trend, Propulsion, Wave, Grab, tell me whether or not the stock is a laggard or a leader. So not always, but very often in the same window, if the stock is outperforming or equally performing the ETF, I will look to be in all of it. I'll play the tide and I'll play individual boats. Absolutely. Okay. Next is, hang on, gang. So when it comes to the individual strikes, the width of my spreads, understanding volatility to get the right width on the spread, not too wide, not too narrow, right? We'll be covering all the details on how I do that. And I've got a very process-driven way to do that. It's not by feel. It's using support, resistance, and historical volatility, gang. And I'll walk you through the process. So as far as implied volatility, Mark, I'll touch on implied volatility, but again, don't be afraid to be a heretic, gang. I don't rely on implied volatility that much. I look at the underlying market trend and I use movement or momentum within the context of that market trend to gain an edge. I'm aware of the IV percentile. I'm aware of the implied volatility, but it isn't a huge part of why and what I do. Now, think about this for a moment. With the tools that most traders use in options trading, look, if that's all we collectively needed, then all of us would be collecting credit and writing debit spreads and going on our merry way. But there's clearly something missing. Otherwise, we wouldn't be trying to educate ourselves and get better at options trading. And my feeling was a lot of the tools that are generally available to the public, a lot of the methodologies that are kind of accepted almost dogmatically, I wish they worked, right? We have to think outside of the box. The folks who are writing options, they know all these things. They've understood how to game this, as do the algos. We've got to think outside of the box. That's my feeling on that. So I'll do some things that seem very unorthodox because I think in many ways we have to be. And I've been that way for most of my career. What are you looking at to determine the best? Mostly price, Todd. Price and movement or momentum. However you want to. I like movement over momentum, but mostly price, individual price, and movement. Hey gang, so if the link, let me double check here. And we'll get this fixed one way or the other. So yeah, make sure. Okay, you know what? I'll go back and check. Yeah, I can see that it's taking me to the box folder, but it's not taking me to the right file. Well, darn it. You know what I'll do here? Let me do this here real quick. Hang on. I'm going to give you guys another link. I'll give you the direct link for it. Here we go. It's a little bit uglier, and I'll fix the link as well. Here, let me give you the link as well. I know this is why we gave you that fancy schmancy easy Raggy's Ultimate Toolkit. But if you go to that link, it should be working, and we'll find a way to get you guys that. And I'm going to push it through in the chat window as well. Okay, that ought to take you there. I'm going to double check on my end right now. And if it's not, I'll see what I can do to get it to work. If worst comes to worst, we'll just send it as an attachment or something. Yeah, if worst comes to worst, gang, if it's not working, yeah, that's going to be box. Worst comes to worst, we'll attach it to the replay. Yeah, if worst comes to worst, we'll attach it to the replay. Okay, gang? So if that's not working, yeah, we'll attach it. We'll attach the PDF and get it to you guys. No worries. We will get it to y'all. And you're going to get the indicators tomorrow during the tech setup as well. Okay? But yeah, we'll definitely get it to y'all. We'll definitely get it to y'all. Okay, so do I use a special scanner? Nope, you don't need one. Nathan 2020? Nope, you don't need a special scanner. You just need your TOS layout or your TradeStation layout. You just need to be able to scan the stocks together. Nope, no fancy scanner required. I mean, there's some neat watch lists that I use in Thinkorswim. I'll give you guys the custom watch list, but nope, fancy scanners. It's far easier than that. Let's see. Do I use indicators to find which ETF to trade? I do. I use some indicators, and I do use a couple websites that help me pinpoint relative performance. We try to automate as much of that process as possible. Okay. So do I use indicators? I'll use a couple of websites to determine what's been outperforming over the course of, say, some weeks or some months. Relative performance is easy enough to determine. But as far as the indicators, yes, the indicators are mostly for two things. They're for, and I'm looking, SEBI? So I hope I pronounced that right. So the indicators are for entries and exits. That is true. But it's also for determining the underlying market behavior, which is probably just as important and a precursor to your entries and exits. Yeah, so underlying market behavior and your entry and exit zones. Okay. All right. On basic, unless a trade happens during Monday, no, basic gets the basic is no trade alerts. Thank you for asking. But no, the pro and the elite are the trade alerts. And the basic is the free indicators, the class itself, the tech setup. You'll get my chart books. You'll get a lot of resources, but it does not include the live trading bonuses. One of which is the alerts. Okay. How many total trades do I have active at the same time? Excellent question. It depends on the underlying market behavior. And here's a really important thing, FTE player. Depends on your risk tolerance. Because remember, every single position carries its own risk. The more positions you have open, well, you guys know, the more risk. So at some point, you might hit a threshold where you say, look, I've got enough positions here where my capital exposure in terms of what I've spent and my potential risk of ruin risk of ruin is basically down 50% in your account. We don't ever want to be near that. But if you ever reach that point, that's when you shut it down. And why do you need to, one thing I did not mention, I can't believe I didn't mention it. I've never blown up an account because of these types of guidelines. All right. Let's see. The masterclass is on Saturday. The tech session is tomorrow. So the class does begin tomorrow, gang. Absolutely. If you can't attend the tech session live, no worries. It's recorded. No problem. And the class, the educational, instructional part of the class for the strategies with me is on Saturday at 1 Eastern? 1 Eastern. Yeah, 1 Eastern. Why do I not buy both legs at the same time? Santosh, especially when it comes to a debit spread, because one side of the trade is going to be less effective than it could be had you legged in. Legging into debit spreads, I think, is vital. Credit spreads are a different story, right? Remember, I do not advocate the uncovered, I don't recommend the selling premium uncovered. But if you do not leg into a debit, I find it's not nearly as effective as if you do. Far more important to leg into debits. So tomorrow, by the way, gang, let me just remind everybody, the tech session that we have coming up is tomorrow at 4:30. What time is the class at? I'm trying to remember. Yeah, I'm trying to remember what time the tech session is. It is tomorrow after the close. Yeah, it is tomorrow after the close. All right. All right. Are the same strategies applicable to currency pairs? David, you can trade futures with this strategy. You can trade the ETFs on currencies with this strategy. I mean, options are options, right? So the trick is, are they liquid options and do you have the flexibility and expiration? But yes, you could. You could trade this with futures. You can do this with stocks, clearly, as I've shown you guys. ETFs for sure. And yes, you can absolutely do it with futures. I just don't do it with futures as much because, well, we'll get into it in class. But if I'm looking at the NASDAQ futures, I'll typically go with the QQQ. And I'll use the ETF alternative. Where will the trades be posted? They'll be posted in the room for the live trading, Carl. And once you get the Simpler Trading mobile app on your phone, they will be sent to your phone as well. So if you have to step away or whatnot, life happens, right? During our hours of live trading, you can also set it up so it's sent to your phone as well. How do I determine targets? Less and much the same way that I determine entries: support, resistance, volatility, as well as volume. So it's really just turned upside down, the same strategies in terms of, what the window is for entries, meaning support, say for a buy. Well, then on the flip side of that, it's the resistance for an exit. So same idea. All right. Same idea. Just turned upside down. Let's see. The class, everything is recorded. Sandra, everything is recorded. If I'm on the mic, live sessions, the class, tomorrow's tech session, yeah, everything is recorded. If I'm out, how detailed are the alerts? They'll tell you where I want to get in, the strike, the expiration. I mean, everything you need to know to populate your order entry platform to execute the trade. So all the criteria your order entry platform would require, limit order, whether we're buying or selling, whether I intend to make it a put credit spread or a credit spread or a debit spread, or if I'm just going straight up long call, which of course we always have the choice to complete a debit spread. But yeah, everything that you would need to plug into your platform is included on the alert. All right. Okay. When I exit a position, oh, if it's deep in the money, George, I think exits have a lot to do with proximity to expiration, proximity to earnings and different events. I think exits have a lot to do with the kind of momentum. One of the things I find chronically a lot of options traders don't use, they get abused by it, but they don't use it, is that movement, is that momentum. And I'll utilize that quite a bit. Okay. All right, let's see what else we have. And we will make sure, gang, that we get that PDF to you if we need to somehow attach it. I'll go see why that link isn't working, but we'll get that PDF to you one way or the other. Okay, we will get it to you guys one way or the other. Let's see here. So thanks for your patience there. Thanks for your patience. And the tools, I have these free tools on TradeStation, Thinkorswim, TradingView, and I think they're in the works or they're available on Tasty now as well. Tastyworks as well now. Okay. All the sessions are recorded. The class starts on Saturday at 1 o'clock Eastern. The tech session is, I believe, tomorrow, 4:30. It's going to be after the close. It's 4:30 tomorrow after the close. And I'll be there with you guys as well. So Eric and I will be there. So if you can't join us tomorrow, no worries. It's recorded, but Saturday you'll definitely want to be there live if you can be. If not, that's recorded too. Okay. All right. So I think we have covered the questions that we can tonight. Yeah. All right. Let me see here. All right. I think we're good. So again, we'll get that PDF to you all. Join us for the tech session tomorrow. We're going to put all the indicators in the resource folder. So you're set there. As soon as you sign up for the class, if you say you do it right now tonight, the resources will be there for you to start installing the indicators with Eric tomorrow, right? So he can walk you through it. I see some questions here for the mastery. Okay, so gang, for those of you that are interested in the mastery, which is kind of, we haven't officially released it yet, so you guys have some insider information here. Apparently, on the thank you page of the class sign up, we've got a killer deal on the mastery that you have there. So those of you that are asking about the mastery sign up, on the thank you page after the class, they present you all with a really good kind of an opening. We're just starting this mastery this month. We just started it this week. Yeah, so for those of you asking about the mastery, I saw a few questions about that. Thank you page for the class has an offer there. All right. Let's see. I think we're good. So tomorrow, 4:30, I'll be with Eric tomorrow. I'll be with you guys. I'll answer all the questions you guys have about the indicators. Eric's going to go through the presentation to get you guys set up. And then I'll hang out and make sure you guys are set up for the indicators. I'll show you some things with the multi-charts and a lot of cool things with the JT trend. Yeah, we have some very cool stuff. And we'll do that tomorrow. And then Saturday starts the class. All right, so I'll be with you guys tomorrow. Eric and I will get you set up. The tech stuff you want to get out of the way, right? And then you can just work on the educational stuff. So we split that up. Very cool. All right, that's all I've got for you guys, gang. I didn't want to hold you up too much longer. We have a long weekend ahead of us. Very cool long weekend starting tomorrow afternoon. So I'll see you guys tomorrow afternoon with Eric. We'll get your charts squared away. All right. That tech session comes to the basic, pro, and the elite. Live trading with pro and elite. Remember, we're doing very different structure with the live trading. So I'm super excited to take you guys through either half of November or clear into the first week of December with the live trading because we've spread it out the way we have, which is something we've never done before. So we'll be able to do a lot in terms of preparing for the coming end of year trades, as well as preparing for possibly even what's going to happen early 2021. All right. Okay, gang. Thank you as always. One has 2 and one has 4. Peter, you got it. Pro is 2, Elite is 4. You got it. Basic is the class and the tech session. Pro is the tech session, the class. 2 days with me, 2 live trading sessions with me, and the dates are just so you guys have them. Hopefully, you can clear your schedule to hang out with me. 1:30 to 3 Eastern. So we're gonna basically do this the second half of the day. That's when I usually do my scanning for end of day opportunities. And, we're probably going to roll into 4 o'clock. So set aside about 2.5 hours for each one of the days. We'll probably easily go into the close together. Okay? Yeah. All right. Let's see. Oh, a bunch you signed up for the class? Very cool. I'm looking forward to seeing you tomorrow. Hey, set aside some time after Eric's done, because I'm going to pick up the baton after that point and show you guys a few easy ways to get started, mostly on TOS, but some easy ways also on TradeStation to get some of my multi-charts and some cool tools up and running. So I'll have a little bit of time tomorrow with the tech session. Again, if you can't join us live, no problem. It will be recorded, but I'll be joining Eric tomorrow. Yeah. I'll be joining Eric tomorrow, so I can't wait to see y'all. All right. Okay, that's it from me. Looking forward to seeing you tomorrow. Gang, enjoy the rest of your day. Rest up, get a good night's sleep. We're going to have a great weekend together. All right, gang. Thanks for your time. Be good to each other.